Hello and welcome to Active Trades Weekly Outlook. The week ahead of the official start of another earnings season will be fairly subdued for investors, but will be dominated mostly by US employment data ahead of the next Fed meeting, which takes place at the end of the month. Employment figures are finally seeming to be affected by the tightening cycle imposed by the Fed, and since wages and salaries are a significant input cost for businesses, a decrease in these numbers generally results in lesser prices for goods and services, ultimately causing the inflation rate to fall. Let's dive in. A number of manufacturing PMIs are due throughout the day for September from countries such as Japan, Spain, Switzerland, Italy, France, Germany, the EU, the UK, Canada, and the US. PMIs for the manufacturing sector across the board have been below average, sitting below the level of 50, which indicates contraction in the industry. In particular, the US ISM manufacturing PMI rose to 47.6 from 46.4 last month, beating the market estimate of 47. However, this figure nonetheless showed industrial economic activity had declined for the 9th consecutive month, and forecasts are only for a slight improvement this month. The seasonally adjusted unemployment rate for the euro area remained at a record low of 6.4% in July, which was in line with market expectations. A year earlier, the figure was substantially higher at 6.7%, and forecasts for August put the figure rising again to 6.5% when the new data is released on Monday. The Reserve Bank of Australia is due to meet on monetary policy this week, with a decision statement released on Tuesday. The RBA held its cash rate at 4.1% at Governor Philip Lowe's final meeting, prolonging the rate pause for the third month as expected. The board said inflation had peaked but would remain high for some time, and more monetary tightening may be required to return inflation to the goal range of 2 to 3% in a reasonable period. However, households are now worried about another rate rise before the end of this year, as annual inflation increased to 5.2% in August from 4.9% in July due to rising fuel prices, rent and insurance costs. US JOLTS job openings are due on Tuesday. Vacancies fell 338,000 to 8.8 million in July, the lowest level since March 2021 and below the market estimates. After months of Fed monetary policy tightening, job vacancies may again fall for the fourth month in a row to around 8.5 million for August, signaling that the labour market is consistently cooling. The Reserve Bank of New Zealand meets on monetary policy this week with their decision statement due on Wednesday. In August, the RBNZ maintained the official cash rate at 5.5%, prolonging the rate pause for the second month and matching market expectations. After 525 basis points of rate rises since October 2021, the board highlighted that the current level of interest rates was restrictive enough. However, inflation remains far too high at 6% for the second quarter, with new data due mid-next month. Analysts see a 25 basis points bump is likely to be passed from the meeting this week. The ADP employment change is due on Wednesday as well, preceding the official government employment figures from Friday. Despite market estimates of a 195,000 increase and a revised 371,000 increase in July, private firms in the US employed 177,000 people in August, the fewest in 5 months. Forecasts are for around 150,000 additional jobs for September. A number of services PMIs are due throughout the day for September for countries such as Japan, Spain, Italy, France, Germany, the EU, the UK and the US. PMIs for the services sector have generally been stronger than manufacturing, with many sitting above or around the level of 50, which indicates growth in the industry. For example, the US ISM Services PMI surprisingly increased to 54.5 in August from 52.7 in July, signifying the highest growth in the services sector in 6 months. However, expectations are for a slight drop this month to 54. Australia's trade surplus decreased to 8.04 billion Australian dollars in July from a downwardly revised 10.27 billion in June. As exports decreased and imports increased, the trade surplus decreased to its lowest level since February 2022. When the latest report is released on Thursday, forecasts are for a further dip to around 7.5 billion. Germany's trade balance is also due on Thursday as well. The country's July surplus was 15.9 billion euro, down from 18.7 in June, when it had seen its greatest increase since January 2021. Expectations are for a greater surplus for August to the tune of around 16.8 billion euro. The US trade balance is due on Thursday as well. Despite market expectations of $68 billion gap, the deficit for July only increased to 65 billion from a downwardly revised 63.7 billion in June. A slight increase to 65.1 is expected for August. Canada's IV Purchasing Managers Index, due on Thursday, rose to 53.5 in August from 48.6 in July, above market expectations of around 49.2. After a minor decline in the previous month, the most recent data showed that Canada's economy is once again expanding. However, forecasts are for another dip below 50 for September, so the positivity may be short-lived. A collection of employment data is due from Canada and the US on Friday. In Canada, the unemployment rate was 5.5% in August, steady from the previous month and slightly below market expectations. Although the numbers show some weakening in the labor market since last year, the rate is still much lower than it was before the pandemic, and the labor market will still be historically tight, even if it increased to the forecast level of 5.6 this month. The workforce is expected to lose around 30,000 workers for September after adding just under 40,000 jobs in August. In the US, the economy created 187,000 jobs in August, above market predictions of 170,000 and a downwardly revised 157,000 in July. In spite of this was the third consecutive month in which job increases were below the 200,000 level, suggesting a progressive softening of labor market conditions. The US Bureau of Labor Statistics is expected to report growth of around 150,000 positions created for September, while the annualized average hourly earnings are projected to drop from 4.3% to 4.1% in the same month. That's all for this week. If you'd like to read the full outlook, please visit the analysis section on our website. Happy trading!